in the last session we have discussed about the interaction of the planning and optimization team with the different external parties. So if you see the arrows here, so it interacts with publisher, it interacts with authorities, international energy agency. Okay, then it also interacts with its regional and global office. Again, it has to interact with trading, scheduling, transportation, terminal operations and administration subdivisions of within the supply chain department. And if it has to plan properly for the refined products or the loops or any refined products, so until unless it knows what is the refinery production, what are the loops blending that they are planning, what is the marketing, what is the demand and supply, what is the retail sales that they have to consider. So until unless they have all the first-hand information, they will not be able to do the planning. Okay. And as a part of planning, we discussed about the different timelines. So there can be an yearly planning, weekly planning, and there can be monthly planning, quarterly planning. So all that also we discussed in the last session. Okay. So again, so how do they decide on the monthly planning? On what basis? The decision is based on what? So whether it is a good idea to buy the crude, produce the products from the crude, or it's better to buy a product from outside, or whether it should be a maximum crude throughput versus crude throughput plus feedstock. So if we add feedstocks with crude, so whether that will give us more yield. So whether it is local purchases versus imports, that means whether it is better to buy the products from the local upstream companies, or it's better to buy from outside. So all these, these are the different decision criteria that they consider when they have to decide upon the planning. Okay. So then the results. So what are the results that they consider? They publish it. So what is their planning? So they generally do the planning. Some companies do the planning for 8 weeks. Some companies they do for 12 weeks. Some companies they do for 15 weeks. And again, some companies, for some products, they do a planning for 8 weeks. Some products they do for 12 weeks. Some products for 15 weeks. So depending upon the kind of product, the kind of market economics, they try to decide on the planning part. Okay. So the inventory strategy. So how much inventory they need to maintain in order to meet their customers' needs. So commercial signals also they try to understand. So whether they would be able to go for spot purchases, or they should go for exchange volumes. Okay, so they consider all these different details in order to decide upon and plan and optimize the whole flow of the crude and its relevant byproducts. Okay, so we have finally we have discussed about this. So the global and regional HQ. So they give the guidance and strategy, so that they consider official publisher information. That is, like, there are different market quotes that you get, like Argus, Platts, okay, so Lundenberg. So those companies publish the information of the quotes, and that is considered as an input for the planning and optimization team. Similarly, there is a crude feedstock processing, plant maintenance, what is the product demand, what is the inventory levels that they need to consider, what are the prices that they need to consider. So considering all this, the planning team does the consolidation, and after that they publish the relevant planning cycles. They try to optimize the product flow. Okay, so considering all this, they will try to decide. So what is the final decision that they have taken? Again, these information, whatever is there, this information is received by the different subdivisions within the supply chain department. So these are the different subdivisions that we talked about, right? And again, these are the different organizational orgs in the same company, or different departments within the same company. So like this, so when they have to understand, or when the planning and optimization team have to give a final decision or a final plan, so they have to consider all these inputs. So this is what we discussed in the last session. Okay. So now in this session, we will talk about the next subdivision of the supply chain distribution. Okay. So the next supply chain, the next subdivision of the supply chain distribution is trading. Okay. So now if you see the screenshot here, okay, or the picture here, so this trading subdivision of the supply chain department deals with the global and regional head office, okay, because the trading wing here which we are talking about is of a company like in just some time back I have shown you, right? So I have shown you about the different oil companies within the country. So in Netherlands there is one company, okay, then in Sweden there is another company, in Finland there is another company, right? So for all this there will be a global trading company also at the headquarter level, right? So each of these local companies can have their trading wing, as well as a headquarter company can also have its trading wing. So sometimes what happens, this takes care of some trades for supplying it to its local affiliates or the local companies. So that is why there is always an interaction from the trading wing of a local company with the trading wing of a headquarter company, okay. So similarly they also deal with brokers, okay, where there is a purchase and sales whenever they have it. So they deal with those brokers, and they also deal with the suppliers or vendors, because here we are talking about the refinery or the downstream. So whenever the downstream companies have to process the crude, so obviously they have to buy the crude from outside. Again, they can buy the crude from within the country, or they can buy the crude from outside the country. So if it is buying the crude or purchasing the crude from outside of the country, we call it as a import. If they are buying it inside the country, we can consider it as a domestic purchase or a local purchase, okay. Similarly, the products that they process from the crude, they can be kerosene. I mean, we have talked about the crude oil distillation and its byproducts. So there can be there are n number of byproducts which we talked about, right? So that products, again, so they will have to sell to its customers, right? So again, the customers can be a local customer, or he can be a export customer, okay. So again, sometimes the other company, like there is one company in Netherlands, another company in Sweden. So sometimes there will be a movement of the products between the Netherlands company to the Sweden company. So that is nothing but our intercompany movement. Again, for those intercompany movements also, sometimes the prices are charged. There will be a transfer fee that will be charged. So that also will be considered as a part of the scenarios, okay. And again, if they have to do the trading, they cannot again do the on its own. So obviously they'll have to interact with the scheduling team, because if they buy the product from the supplier or vendor, so until unless they do a schedule or they schedule a shipment and create a nomination, they will not be able to bring the product. Similarly, until unless they discuss with the administration team who are responsible for the relevant administrative activities, like it can be a legal, it can be tax, it can be sales teams who are involved. So until unless they interact with them, we will not be able to create the contracts in the system, okay. Similarly, as for any trading, whether it's a purchase or sale, if a country has a relevant taxation, so obviously they'll have to consider the tax as a part of their contractual agreement. So that is the reason why they also deal with the local tax team. So what is the supply location, whether there should be any tax that has to be levied or not. So that all relevant considerations are taken whenever they enter into the contracts. Clear till now, or any questions?
Sir, is this trading rule pertinent to exchanges from system point of view?
It can be. Exchanges is one of their activities. Exchanges is not their major activities. Exchanges is one of their activities.
Okay. And the other are like a business oriented?
Purchase, sale, hedging,
okay,
statistical movement, intercompany movement. These are all the different activities that they take care of. Okay. That I will discuss. I mean, the next point is that only. I will discuss in each and every, what are the different activities they do, and with respect to that, what is important that I will discuss. Yeah.
From system, you know my question from system point of view.
Yes, sir. That is the reason, Mr. Vaji, I am talking about. I am taking so much time in order to explain you the background and the business process in real time. Okay.
Thank you.
Yeah. So I mean, whatever I have explained, is that clear to you? If that is clear, then I'll go to the next step.
Yes, sure.
Okay, fine. Okay. So now considering the entities, so here, so this whatever the picture that you are seeing here, okay. So we will just a little next step we'll take. So where we will understand what these companies do. What this sorry, not companies. So what this external partner does, what are their activities, and what are the inputs that we get from the other subdivisions within the supply chain department. Okay, so when we talk about a broker, so they, as we have seen here, this trading team, they deal with the broker. So what are the activities, or what are the relevant information or the activities that they have to get, or what they have to deal with the broker is this. So from the broker, if the interaction that they would have is for the purchase and sale of wet barrels, for any futures, for any swaps, for any hedging. Okay. Similarly, when it is supplier, so that supplier means it's a vendor. So purchase wet barrels from third-party vendor. It can be a trading company. It can be an affiliate. So that's what I just explained you, right? So my supplier can be an outsider, a third-party vendor from outside of the country, a vendor from inside the country, and it can also be my another group company. That means as I have talked about, so there are companies within my oil and gas company group. I have one company in Netherlands, another company in Sweden. So my company in Sweden can be my supplier for some products. Okay, so that is what this talks about. So it can be another trading company, or a headquarter trading company, or it can be an affiliate. Similarly, a customer, it can be sales to a third party. So it can be a customer within the country or outside of the country. Again, my customer can be a trading company which is based, a trading company or trading wing at the headquarter, or it can be another company which is based out in another country. Okay. So global and regional head offices, so we get the relevant strategy, we get the general guidelines from there. And internally, so if you see here, internally they deal with the other subdivisions like planning, scheduling and administration, and local tax. Okay. So from planning, they understand the market observations, what are the availabilities. Okay, because this planning team have the details of the yearly plans, quarterly plans, monthly plans, and weekly plans. Okay, so what is the availability of the product? So whether they have to, in order to meet the demand, do they have to buy the product? And in order to meet the requirements of the customer, so how much can they sell? Okay, so that information will be available from the planning team. Scheduling. Now, when they try to buy the products from supplier, so when we buy it from outside of the country, so obviously we'll have to get the product through a ship. So they have to deal with the scheduling team. Okay, and then scheduling team will deal with the transportation team in order to get the details of the ships and all that. Okay, so these people will try to check the availability, what can be delivered, what is available, and out of that availability, what can be delivered. So that information will be coming from and shared with the scheduling team as well. Similarly, administration. So what is the pricing, what is the volume, okay, what should be the claim handling. And again, as I told you, depending upon the country, so there are different taxations that are relevant. So this local tax, whether we have to consider the taxation part for the purchase, whether we have to consider the taxation part for the sales, and if it is there, so whether we should, how much percentage should we consider, whether it is a 5% tax or a 10% tax, or whether some products are given any exemption. So you will have to understand the taxation of that country in order to set that up in your system as well. Okay, because whenever you are purchasing, whenever you are selling, you need to consider all these details. Okay, so now let me explain you the scenarios one by one. Okay, so typical business transactions in a trading. So the different transactions that we talk about is the purchase transaction. Okay, so now please understand what I am talking about. Okay, so there can be a supplier, okay, or we call him as a vendor. Okay, now so oil company, consider Netherlands. Okay,
Are you sharing any other than PPT?
okay, you're not seeing the Excel?
No.
Okay. 1 minute. Okay, now?
Yes, we can see.
Okay, great. Okay. Okay. So when we talk about the purchase scenario, okay, now we are talking about the purchase scenario. So the team we are talking about till now, what we discussed is about the subdivision, trading subdivision within the supply chain department. What are their typical business transactions that they get involved? They get involved in the purchase, they get involved in the sale, they get involved in the exchanges, trade deals, back-to-back purchase and sales. Okay. So when we talk about purchase, so what are the different scenarios that I talked about just now? So we can buy it from an internal, I mean within the country, the supplier within the country, or we can import it from outside. Correct? So now, so again, a scenario is I can buy it directly. I mean, for example, consider that we are a company in Netherlands. Okay, so whatever the discussion that we are doing, let us consider that our company is in Netherlands or any country. You can consider India or any country you want, US, anything. Okay, so one option is you directly buy it. That means your trading wing will interact with the supplier or vendor. Okay, so again, a supplier can be from local or he can be out of the country and you directly buy it. So this is one scenario. Okay, so this is what I'm talking about is all real scenarios. Okay, real time scenarios which happen in day to day scenarios of an oil and gas company. Okay, similarly there can be a chance that, for example, okay, your company is not so involved or your company should not do a direct transaction with the supplier or vendor. Okay, then in that case what they do, there will be a headquarter which will be based out, because as I have told you, there are different companies within the group company, right? One company is in Netherlands. Okay, okay, so another company is in Finland, another company is in Sweden. Okay, so now in this case what happens, so obviously costing wise or the human resources wise, okay, so if there is a trading wing in each and every company, okay, so you will have to consider all the relevant costs. So in that case what some companies do is there will be only one trading wing at the headquarters. Okay, so they only do all the purchase and sale and they will make sure the product is delivered to the relevant group company. Okay, whenever there is any product required. For example, if any requirement is there for Netherlands, so this company will buy it. okay, and the product will be moved to this company, the affiliate company. We can consider it as an affiliate company. Okay, so the main purchase will be done by this company from vendor, and their product will be delivered to the Netherlands company. So the payment will be done by the headquarters to the supplier, whereas the product will be delivered to the oil company in Netherlands. Clear? Or any questions? Hello? Hello?
Yes, I clear. Yeah, Sai, clear. Clear.
Okay.
Sai, clear.
Yes. Okay. Fine. So these are the different scenarios. Again, so whenever we talk about the purchase scenarios, okay, so there is a specific term called as Incoterm. Okay, so maybe after 4 or 5 classes we will discuss in detail what are these Incoterms. Okay, so Incoterms are the international commercial terms. Okay, these terms play a very important role in the oil and gas industry. Okay, not only in oil and gas industry, any industry, these terms are very important. But for us also it is very important, because this will determine who will deliver the product, where the product is delivered. Okay, the general Incoterms that are used in the oil and gas industry. Okay, so one is FOB. Okay, it is called as free on board. Okay, another one is CFR. Okay, costs and freights. Another is CIF. Costs, insurance and freights. Okay, another one is DAP, which is delivered at place. Okay, there are some, I mean, what these Incoterms are, Incoterms generally they keep changing. Okay, I mean, every 10 years there is an international body which will keep checking. Okay, and some terms, some Incoterms will be removed, some Incoterms will be added. So generally every 10 years they do it. So recently it has been published, the new Incoterm set has been published. You can refer to, I mean, if you have some time, please refer to the different international commercial terms so that you will have a clear idea. Okay, so some older terms, there is a delivered ex ship. Okay, and there is another called as EXW, ex works. Okay, so I will not go into detail now. We will discuss it maybe after 4 or 5 sessions. I will discuss in detail, or maybe some around half an hour session in order to discuss about this. Okay, so again, FOB, free on board. So free on board is generally a customer pickup scenario. Okay, that means the company will not be responsible. I mean, whoever is, for example, this supplier. Okay, so the supplier, what it will do, they at their doorstep, they will just sell it to the oil company. Because here, when we consider the scenario from a supplier, it is a sale to him, correct? Similarly, when we consider the scenario from an oil and gas company who is buying it, it is a purchase to him, correct? So for this company, when the oil company is coming to him and buying it, so he will provide the product at his doorstep. That means the oil company is a customer to him, and the oil company sends its ship to him, and the product will be delivered at the supplier's doorstep for the customer. Okay, that is one scenario. There is another scenario called as FOB delivered, where the product will be delivered to the customer. Okay, and there is another scenario like cost and freight. So where the supplier will bear the cost and freights of it, and it will deliver at the customer's doorstep. Okay, So in that way, so this will give you, these international commercial terms will explain who is the product owner, at what step the product ownership is transferred, and if there are any losses, if there are any unforeseen circumstances that happen. So in that, or at that point, who is responsible to bear the cost? So that whole information is given with respect to the international commercial terms. Okay, so whenever they enter into any purchase contract or a sale contract, okay, so they always decide on the international commercial terms. Okay, so these two are very regular scenarios. Okay, generally in an oil and gas company when we talk about it. Okay, now let us consider the sales scenario. Okay, so in this case also, so scenario 1. Okay, or yeah, so let us consider, yeah, scenario 1. Okay, now in this case again same set. So this will be my relevance. So that means either I can sell directly, okay, so I can sell directly to a customer, or here, okay, in this case. Okay, in this case what will happen? The first case, just a plain one again. So I can sell it locally, or I can sell to a customer who is out of the country. Okay, so if my company has the ability to directly sell it, it will sell it. Okay, or sometimes if there is a headquarter which is dealing with this oil and gas company, okay, so now we will sell it to the headquarter, and that headquarter will be selling it to the customer. Okay, here also in this case it can be a customer externally, and then if it is in this scenario, okay, so here we can consider scenario 3. So here my company can be Netherlands. Now I will sell it to the headquarters. Now it will sell it to another affiliate. This is called as the intercompany scenario. Okay, the similar case is also possible in the purchase side as well. Okay, so okay. Okay, clear? Or any questions till now? Hello?
Sai, hello.
Yes, please.
Yeah, Sai, scenario 3 you added, but how can we differentiate 2 and 3 in both cases, purchase and sales, from this opposite?
So this is an intercompany scenario.
Yeah, but once we are done, our transaction is involved up to the headquarters, right? Finland headquarters. Suppose if we are Sweden company and we are selling to headquarters, the transaction or our business ends here. Then it is
correct
to headquarters. So both
yes,
aren't the same 2 and 3 technically.
Technically, it's an intercompany, right? So again, there are a lot of scenarios that we can consider. For example, if the systems are in the same landscape, then you can enable an intercompany invoice created. Okay.
But our
so
transaction ends with the company in Netherlands Like if we are in Sweden, so we are selling directly to
No, it can be, right? I mean, it all depends upon. So, for example, then now here we will get the concept of this, who will be the owner. For example, now if this headquarters is taking the ownership, then you will sell the product, then they have to recognize the stock in their plants of headquarters, and then again they'll have to sell it to the Netherlands company. Okay. If headquarters is just a passerby, that means it doesn't hold the stock, then what it will do, purchase wise it will pay the product, okay, but the product movement will happen directly. So what it will be, what it will do, it will move the product from Sweden plant to the Netherlands oil company plant. So this will be just a payer, but it is acting as a mediator, but it will not hold the stock. So there can this, I mean, this can be another scenario. I mean, we see if we go on. I mean, I just don't want to make it more complex for the people who are not from SAP, because it will become more complex when we talk about this.
That's why in scenario 2, headquarters is buying and selling ahead, right? And in scenario 3, headquarters is just...
Yeah, so this is like, we are buying from outside. Then again here also we can have, like, if headquarters have their own plants, so then you will have to receive the stock in their plants, and then again from that plants you can sell the stock to the oil company. So again, scenario 2A, 2B also we can consider if you want to. Similarly, scenario 3A, 3B also. For example, here if headquarters has its own plants which are valuated and which are inventorized, okay, then you will receive the product into that plants, and from that plants you will have to sell to oil company. But again, I mean, for some scenarios, real-time scenarios, it doesn't make any sense until unless you're not doing any real value addition to the product, okay. So there is no point in having this, because at every step there will be a transfer fee, there will be a product cost, COGS you need to consider, all that will be there here. So you'll have to do some activities within your company. So inventory strategies you need to devise, you need to do a costing run, which is again for finance guys to calculate what is the cost of goods sold, what is the revenue, what is the profit. Okay, so some important activities will get added if they also have their inventory and valuation for at their end. Okay, clear till now, or any questions?
Yes.
Okay, great. So now we talked about purchase, we talked about sale, okay, and then we have exchange scenario. Okay, so exchange here in this, what will happen, for example, okay, so now the scenario will be same or a little here in this case, if it will be a buy sell, okay. So now here what we are doing here, the Netherlands company is buying from oil company, Sweden, okay. Here the Netherlands company is selling to Sweden company, okay. So this is nothing but a buy sell agreement, okay. Now in this exchange, okay, so either they can go for a buy sell, okay, again it can be intercompany or it can be company outside, it can be some another company which is not part of this oil group company, okay. So it can be between companies, okay, it can be between these two companies. So in this case they can have a buy sell agreement, okay. Similarly, it can be between, when it is an exchange, the company with whom we are trying to have, okay, will be both a vendor and a customer, because sometimes there will be a scenario that we will buy from him, sometimes there will be a scenario that we will sell to him, okay. So here there are options of buy sell, borrow loan. That means, so we will loan a product, and at the quarter end we will understand, or we will try to do the netting. So how much is the product that we borrowed from that company, how much what are the different products we have loaned to that company. So at the quarter end what they will do, either they will do a net off and they will try to carry it forward for the next quarter, okay. If it's a buy-sell agreement, what they will do, so whatever is bought from the other company, they'll have to net off with the sales with respect to that company. So whatever, for example, you are buying 12,000, okay, and you sold 10,000, okay, so 12 minus 10, so 2,000. So because you bought more, you will have to pay for the 2,000 barrels to the other company. It can be other way around also. For example, you are buying 10,000, okay, and you are selling 12,000. Then in that case, so your sales are more, what you bought is less, so you will have to recognize the revenue from the other company. Okay. Now apart from this, there are different costs or the fees that we call. Okay, so we have different fees that we will consider as a part of this exchange agreements. Okay, so it can be, they are called as fees or freights depending upon the location. Okay, so there are different fees which you can consider. We will discuss this when we talk about the exchanges module or exchanges functionality in SAP ISOL. Okay, so similarly in this case also same thing. So if it is with another company who deals with the oil and gas products, so you can have the buy-sell agreement and the borrow loan agreement also. Okay, so this is another activity which is done by the trading team. Okay, now, so trade deal is again purchase and sales of the products, back-to-back purchase and sale. So whatever we discussed here, right? So if the company is not holding any stock and it is not valuating its stock, okay, so in that case, what they will do, they will have to consider it because they will have to pay them, right? So they will have to consider when they are buying, they'll have to consider the product value with respect to cost centers. Similarly, when they are selling it, they'll have to consider the product cost with respect to the profit centers because they are not holding the stock, they're not valuating the stock. If they are valuating it, then the product cost will be considered based on the product movements. So whatever are the movements that are there, that will recognize the relevant cost of it. Okay, so in that scenario, there will be a back-to-back purchase and sale. That means this company will try to buy it and sell it to it. Okay, so whatever is the product cost that it buys, it will carry forward or it will just recognize the same cost from it, and there will be no margin for this company. Okay, are you getting what I'm trying to say? Hello? Hello?
Sorry, if you can explain me one more time.
Okay. So here in this case, okay, back-to-back purchase and sale. What does this mean, back-to-back purchase and sale? So see, trading is generally what they do is they always try to make out some margin out of the purchase or the sale. Okay, so if they are purchasing, they try to make sure they get the product at a very good deal so that they can save money. Okay, similarly, when they try to sell the product, they also try to get a good profit so that they can earn more, bring more revenue and more profit to the company. Okay, now some deals will be like, for example, let us consider the intercompany scenarios. Okay, so for these movements, okay, sometimes the company doesn't want to recognize any revenue for it or doesn't want to have any profit for it. In that case, what the company will do, they will buy it. So whatever is the cost of the product that it has bought, that it will recover that value from this other company, oil company of Netherlands. Okay, so in those cases, it is a back-to-back. That means it doesn't have any margin. It is not taking any extra margin or it is not recognizing any extra profit out of this purchase and sale. Similarly here also, when it is selling a product from Netherlands to Sweden, it is just selling because it needs some products. Okay, so in this transaction also, it might not recognize any revenue or profit for this. So it will just directly, whatever is the cost that it has considered for this sale, it will just pass over that cost to the Sweden also. Okay, so in those cases, they are called as the back-to-back purchase and sale. Okay,